Hello, everyone, and welcome to the Sustainable Finance Podcast. My name is Paul Ellis, and I'm your host for these programs about developments in this fast-growing industry. Sustainable impact investing is at an inflection point in 2024. So where do Radhika Shroff and her Nuveen Private Equity team see value in this type of investing? Their investment thesis is rooted in addressing two critical and inextricably linked problems. Wow, I got that out. Inequality and climate change. They believe these problems create attractive impact investment opportunities outside of traditional developed markets that offer investors stability, competitive returns, and liquidity for the right asset manager. Climate change knows no boundaries and will impact communities with varying levels of resilience. Nuveen also believes that by targeting the emerging low-income consumer segment and providing that consumer with goods and services that mitigate carbon emissions and build resilience, they will select companies best positioned to grow and lead in the decades to come. Hello, Radhika, and welcome to the Sustainable Finance Podcast.
Hi, Paul. It's a pleasure to be here. I'll let you know that I've listened to some of your other podcasts, and I feel fortunate to be amongst that set of people. So I look forward to our conversation.
Oh, well, thank you very much. We really appreciate that. We're having a great time this year as our platform grows and as we start talking to more and more people like yourself. So we're going to jump right into the questions. You ready?
Yes, I'm ready.
Okay. So in the current market and economic environment, Radhika, what are some of the key trends in impact investing that you and your team are paying attention to in 2024?
So I have some key trends in mind. As I thought about them, I thought, hopefully these are not wishful thinking and they're actual trends. But I think you stated our thesis quite nicely. We are focused on investing in growth stage businesses that are either solving a climate issue or solving an inequality issue. And the reason we're focused on those two sectors is because we do believe that they're inextricably linked, and that as the world warms, different populations are going to be impacted in different ways. So for example, me living in an apartment building in New York, I'm going to be impacted very differently from climate change than a smallholder farmer living on the coast of India. I'm also going to be impacted very differently than somebody living in affordable housing, also here in New York City. And so we're really focused on that confluence and saying it's not just that we need to think about how to get more carbon dioxide out of the air. We do need to do that. But we also need to focus on ensuring that populations, wherever they are in the world, are resilient to climate change. And we believe that inequality plays a big factor in that. So I just wanted to kind of get out there what we're looking at doing. Now, in terms of the trends that we're seeing, the first broad macro trend that we're seeing is that asset allocators are starting to see impact private equity as a mainstream asset class. And importantly, I think they're also starting to see that you can invest with an impact fund and still expect the same returns that you expect from all of your mainstream private equity funds. And not only can you expect them, you should expect them. The thesis behind that is that we're not going to solve the world's biggest problems without being able to attract commercial capital. And the only way we can attract commercial capital is by showing commercial capital that we can return private equity returns with our impact investments. And that impact and financial return can actually, they're not mutually exclusive. They can actually go hand in hand. So we're seeing through our efforts, our fundraising efforts, et cetera, an increasing recognition that a fund like ours should be put on the same level as any other private equity fund out there that they might be looking at in terms of returns.
Okay, well, I think those are very important points to make right up front because, as you say, a lot of investors over the last 50 years or so have shied away from the private markets in terms of impact investing for a number of reasons. But what unique benefits can impact investing offer from both a financial and environmental and social impact perspective?
Yeah. I mean, private equity is really the tip of the spear when it comes to driving impact in companies. So, as we know, private equity is longer term than public markets, and we have 5 to 7 year investment horizon. And so we're able to sit at the table for at least 5 years, working hand in hand with the company, the management team, the other shareholders, because we typically minority shareholders, to say, not how can we drive financial performance, but how can we also drive impact? One example of this is we recently invested in a company called Power Takeoff. This is a company that drives energy efficiency in the small business sector, and its clients are utilities. The small business sector in the United States is typically underserved when it comes to energy efficiency solutions, and so we were super interested in that piece of it. As I've noted, we not only like to provide our capital, but we like to provide engagement as well to help companies meet their goals. With Power Takeoff, what we're doing is we're leveraging the know-how of our broader real estate platform, and in particular, our affordable housing platform, which is the largest in the United States, and saying, how can we help this company increase its revenue, not only by targeting just small businesses, but also targeting small business energy efficiency in low-income communities. And so right there, you see an example of private equity being particularly impactful when it comes to driving both revenue as well as impact. And then you also see coming to fruition our thesis, which is that we want to make sure that low-income communities are not left out of the climate transition.
So this is an example, Radhika, as you're suggesting, of a dual purpose focused on a particular investment idea and a company that offers these kinds of services. And you can apply it, as you're saying, across a broad population of opportunity because of your engagement with the sector of the economy that it's based in. Am I understanding the conversation here?
Yeah, I think what we're saying is, as private equity investors, we can be patient, right? Mm-hmm. We do need to exit, but we can be more patient, right? And we can engage in such a way that drives impact. And if the impact is linked to the core revenue model of the business, as we drive more impact, we're also driving more revenue. And so that is really our goal as private equity investors.
Okay. Okay, terrific. So now, how do you and your team evaluate the investments that you're in? There's clearly a very well thought out process. Tell us a little bit about that.
Yeah, sure. I noted that we have a very well thought out impact thesis, right? We invest in either climate solutions or income inequality, and we love it when the two come together, right? When we invest in a business where we can help drive that equitable transition. But we're like any other private equity fund. We look at the growth dynamics of the business. We look at profitability. We look at margins. We look at the segment, competition. We look at management teams. We look at the risks of the countries that we're looking at. We look at competition. And importantly, we care deeply about exit optionality. We know, just being private equity investors in impact for over a decade, we know that our industry needs to show investors that companies can be exited, and they can be exited in the same way, with the same velocity as a non-impact focused company. And so we're really focused on exit. So I would say the way that we really look at our companies is the same way as anybody else, but we go a step further because we're impact investors. And we say, what is the but for of this company? If this company did not exist, what are the other options that the end consumer or the end segment has to solve this issue for themselves in a commercial way. And this but-for conversation is key and happens to be one of the most lively conversations we have on the team when we're thinking about an investment, because every single person on our team wants to be intellectually honest around the fact that this is a company that as it grows, it's actually increasing its positive impact on the world than not, right? It's more increasing its positive impact than not. One example of this is we invested in an Indian microfinance institution called Annapurna Microfinance. Now, this is a company when we invested served around 1.5 million female entrepreneurs with working capital loans so that they could grow their business. And we said, okay, but for our investment, what would actually happen here, right? Where else could these people go? This is a company that happens to be going to some of the hardest to reach places, serving women who are underserved from a working capital standpoint with well-priced loans. Since we've invested, this company has doubled in size. We are likely going to be able to exit in the next 12 to 18 months at really strong returns. And we're sort of saying, look, we invested, it's doubled in size, and therefore it now serves 2.5 million women with working capital loans, not just 1.5. And that's where we see our investment going hand in hand with the impact that we're trying to drive.
So can you give us the time frame in which this has happened, Radhika? That's very, very impressive data.
We're really proud of it. India is we invest globally, largely in the United States and India. And some of us on the team have been investing in India for over a decade and driving the same level of returns that you would see in the United States on US dollar terms. In Annapurna, we made the investment in March of 2021. It was a really difficult time to be making investments in India. It was right before the wave 2 of COVID. Mm-hmm. But because we know the sector so well, and because we know the management team so well at the business model, we knew that if we made the investment at this moment in time, we would be strengthening the company's balance sheet at a very, very good valuation. And we knew that those dollars would go towards making more loans to underserved communities. That company grew from 1.8 million clients to 2.5 million clients in the last 3 years.
That's terrific. That growth of revenue and a return on investment is something that you don't see even in the private markets in the best of situations in that period of time. And it also serves a community that, as you well know, is traditionally very much underserved in terms of capital infusions and abilities to reach the communities that need that kind of help. So is this part of your methodology that you and your team use in scrutinizing every type of investment that you're looking at in these markets?
Yeah. We certainly really like when we're serving low-income, underserved clients, right? Especially on the financial inclusion piece, which is largely in an emerging markets India play. But we also care deeply about climate. So again, for example, in India, we invested in a company called EcoZen. Now, this is a company that manufactures and markets IoT-enabled solar irrigation pumps and cold storage, largely for smallholder farmers who are living in areas that could be off the grid or have unreliable utility service. And what this does is it helps them keep their crops irrigated, and it helps them store their crops for longer periods of time in order to increase their income, right? And in that one investment, what we've done is invested in a climate mitigation, a carbon dioxide reducing product. Mm-hmm. In fact, that one company in 1 year alone reduces carbon dioxide emissions by 500,000 tons a year. And we're helping smallholder farmers with the reliability of being able to grow and store their crops. So it is really emblematic of what we're doing. And by the way, all of these companies in our Fund 1, they're on average growing at 40 to 50% a year, right? So to me, what that really means to us is that investing in commercially viable, profitable companies with strong profit margins that are serving an underserved segment of the community that really needs these basic services. And that's really the sweet spot of what we're doing.
So now you've offered a case study, or actually a couple of case studies from your portfolio. How do these underserved communities in these economies around the world react to a company like Nuveen coming into their community and offering this type of capital infusion and long-term investment strategy? That must be an extraordinary process. And if you could just share with us some of the reactions that you get from the local people, that would be very helpful.
Sure, absolutely. And we have a really lovely video of clients on Annapurna talking about what Nuveen in particular has done for their lives. But I'll tell you, we've been investing in these emerging economies for over a decade. We're pretty well known. Like when we come to the table and say we want to look at this business, people are excited and happy because they know a couple things. One is that we are intellectually honest around caring about impact. And so that gives management comfort that we're not going to be there just driving profitability for profitability's sake, but we want to make sure that the profitability is coming in lockstep with the impact. And so it gives them some sense, okay, it's this big US firm. Who are they going to be? What are they going to be like? They know from our reputation that we are going to be there to support them on the impact side as well. The second thing is they know that we can really help them scale. We typically come in, we're not venture investors, but we're also not TPG Rise. We are there to help them with what we call the missing middle, which is we believe there's a lack of commercial investors in that stage of the company development from when it's proven the commercial viability of its product or service to when it's completely scaled to be able to exit to the public markets or to be able to do a strategic sale or sell to a TPG Rise, for example. And they know that we'll be there and we know how to help them scale. I think that honestly, we see our pipeline outside the United States is just as exciting as our pipeline inside the United States, and that's why we're building a balanced portfolio.
That's terrific news. I'm really excited to have you on the program today from the standpoint that you're sharing information that, as you're suggesting also, in addition to the great results that you're getting, a lot of people in the private markets in developed economies look at the potential risks of these types of investments and that they shy away from them. What you're saying is that you have dug much deeper into the process of these economies and the people that you're working with and come up with ideas that are leveraging those opportunities in those economies and at the same time de-risking the longer-term investment strategy. Am I on the mark here?
Absolutely. And it takes a great deal of experience to be able to do that, right? Like it's pattern recognition, it's the people understanding, you can't predict, but you can understand how currencies move, the macro environment. We've done all that. We've been doing it for over a decade. And as I said, and I can't say this enough, the things that we see in India in particular, the growth that we're able to see there, the returns we're able to drive are on par, if not better than some of the developed economies we look at.
Okay. Now, are there other developing economies around the world that Nuveen is looking at or already engaged with where that you can share with us are opportunistic? Tell us about that.
So we look at all of the largest economies, right? So some of the larger countries in Southeast Asia, Latin America, we actually have an investment in a payments company in Latin America that essentially provides mom and pop shops in rural areas in Peru with a handheld device so they can turn into mini bank branches. So this is really financial inclusion, right? You are going into the Andes Mountains, you're handing a store owner a handheld device, and a customer that lives in that neighborhood doesn't have to travel 3 hours to the nearest bank branch. They can do simple financial transactions at this mom and pop shop in their neighborhood. And this mom and pop shop, which is owned by often a female entrepreneur, is able to increase the revenue her shop by 20 to 30%, right? So, and these investments outside the United States are made after deep, like I had known this company for 10 years before I made the investment, right? This is something, and financial inclusion is something we know really well. So we don't take it lightly. We know that investing outside the United States has its macro risks, but I think if you have the right team that has done it for a long time and knows how to underwrite for those risks to the extent possible, you can end up with really good, strong risk-adjusted returns.
That's terrific. So, Radhika, where online can followers of the Sustainable Finance Podcast go to learn more about impact investing private equity at Nuveen? And how can they contact you with questions about the topics that we've discussed in today's episode?
So we are present on the Nuveen.com website. You may have to dig through a little bit to find us, but we're there. Mm-hmm. We have some really interesting thought leadership pieces there where we talk about, why we invest in India, why we invest in companies that are focused on decarbonization of buildings. We have some videos. So you can find us on the Nuveen website, and then I am on LinkedIn, and anyone can find me on LinkedIn.
Will you please send us a few links that we can attach to this program when we drop it? In the Bright Talk channel, they have an attachments tab where we can include articles, we can include videos, webinars. So please send us a few links that we can post and drop with this program when we do that. Thank you very much for that. And thanks again to Radhika Shroff, Managing Director of Impact Investing Private Equity at Nuveen, for joining me today. And our supporters and our followers can join us again next week for another episode. I'm Paul Ellis, and this is the Sustainable Finance Podcast.